an Australian investor today looking at their exposures in terms of equities in particular, one of the questions that often comes up is, well, I want to go global, but I don't know how to do it, or I don't know how I should do it. And the strategy that we built, which focuses on economic franchises, nicely dovetails with most domestic Australian investors' current equity exposures. And if you think about it, your self-managed super fund or common equity investor in Australia will have a large exposure to two miners, BHP and Rio Tinto. They'll have a diversified portfolio of 4 banks, Westpac, ANZ, NAB, and Commonwealth, and they might have Telstra and possibly Woolworths or someone like that. The strategy, firstly, we find we look for businesses that produce sustainable profits, cash flows and distributions, so predictable earnings generators. And we eliminate miners and energy companies from that because of the vagaries of commodity price cycles we think are too hard to predict. We eliminate banks and insurers from that because essentially they are price takers of financial markets and demonstrating, particularly elsewhere in the globe outside of Australia, predictable earnings, if in the case of a bank or insurer, has been a difficult proposition. So we find none that fit our criteria. And so from its basic core premise, the economic franchise universe is made up of stocks that will give a nice complement, if you want, to the Australian domestic focus or the home bias that's built into most Australians' portfolios. On top of that today, we think markets are generally expensive. And so there are a dearth of investment opportunities in which you can generate a 10% per annum return. And so of the 250 odd quality economic franchise businesses that we have identified throughout the globe, only 25 of them today we think generate a return sufficient enough to put them in our portfolio. And so you firstly got to be concentrated in the names that you own, but then selective about the names that you want to ever own in that portfolio. And today that's a much more difficult proposition than it probably has been at any time in the last decade. Firstly, finding the right opportunities and then paying the right price for them is more important now than it's been at any time in the last decade, in my opinion.